the Fed is getting ready to stress test the 19 largest banks. Now, I just read an article. Doing my prospecting, I use a system called Prospect Now, right? If you're in the commercial real estate business, great system for prospecting. And while I was doing my prospecting, I read this article that popped up via Prospect Now, and the link to that article is in the description, so check it out. And the article is talking about how the Fed's making some economic forecasts, and I won't go into some of the numbers that they said. But bottom line, as a result of all this stuff, the Fed is going to be stress testing the 19 largest banks. Now, we haven't had, as a marketplace, to really deal with stress tests on the banks in a major way. Now we are. And what I would say for these banks is their residential portfolio probably is okay, but not so much for their commercial portfolio. So that begets the question is, are we now going to be entering into a distressed state of commercial real estate? I believe we are, depending on where you're at. I'm in Oakland, California. Most assuredly, here in the Bay Area, there's going to be some properties that are going to have some vacancy issues because we've lost a lot of companies. A lot of companies have walked on their leases, although there's still there's still a healthy economic, flow of tenants here. There's going to be some backdraft because of all of this stuff, right? And so how do you navigate through it? And I think as a result of these stress tests, I think a lot of the banks are going to start trading paper, meaning that I think they're going to start selling their loans, okay? Somewhat of a discount to get some of this bad debt, if you will, off of their books. Biggest thing when the regulators come in is they want to see how solvent this bank is. If there's a bunch of foreclosures, can they make it? How much exposure do they have, so on and so forth. I'm not going to get into regulations and all that. But as investors, brokers, and agents, we need to be aware of kind of what's going on, and then how do we navigate through it so that we can maximize our portfolios, or we can make money and we can make wise decisions, okay? So I think that at some point here in the next year, in 2021, that we're going to see a lot of paper trade. There's already been a lot of paper trade 2020, but I think in 2021 we'll see a lot of paper trade. Now, banks have certain regulations that when they foreclose on properties, they got to do certain things. They've got to set aside a certain amount of money. They've got to then, manage, either hire receivers or property managers. They come and manage these properties. They have to be responsible for these properties. And then once that building is on their books, they got to get that property sold, and they got to get it sold quick. So I think what I saw last time in the Great Recession, a lot of banks do is begin to sell this paper off as a much more efficient way for them to deal with some of their distressed debts. I think the people who bought those notes back in the past and are going to buy these notes are going to be mainly investors and investor groups. Sure, there'll be other banks that are buying the paper to try to service it, but for distressed debt, this is primarily going to be investors. And as a real estate investor, by the way, buying a note, distressed note, can be a great way of acquiring property. Now, there are definitely some risks in doing this. And what that means, if you're trying to get to the property, you got to buy the note and then finish off a foreclosure. There's definitely some risks in that. The borrower could file bankruptcy. You could be tied up into that. And then also you got to become the bank, if you will. And a lot of us real estate investors and real estate people have a disdain towards banks and a disdain towards lenders. And let me just say, I said become the bank. You become the lender, okay? And you're not the bank, particularly because banks are regulated different. Banks really don't want to take that property back. They don't want that property on their books, right? But investors, on the other hand, a lot of times are buying these notes because they want the property, right? That's why they're buying the note. And or if the property gets reinstated, they're going to look to make a really good rate of return on their money. So I think we'll see a lot more banks as we go through these stress tests. The 19 largest, the whole bunch of other banks probably going to start doing their own internal stress tests to figure out, hey, what's the wisest way to navigate through all of this stuff, right? We know we got some shifts, some monumental shifts in the commercial real estate industry, how properties are used, properties being repurposed, companies going from maybe 50,000 square feet to 10,000 square feet, or from 10,000 square feet to 2,000 square feet, or people going virtual all the way. So we know there's going to have to be some shifts and some creativity to solve some of these problems. I think there'll be a lot of note sales and note acquisitions, number one. Number two, I think you'll see commercial short sales, and you'll probably see more commercial short sales than the Great Recession, because I think banks would rather, if they can't sell the note, they would rather sell it short than to take it back on their books. Now, I know banks have different philosophies about this, and all lenders are not banks as well. Insurance companies are a little bit different than banks and their regulations, but also very similar. Insurance company really doesn't want that property on their books either. None of these lenders are really in the property management business. What's going to happen is that these lenders are trying to deal with this distressed debt efficiently and effectively. They're not trying to deal with this debt in a way where not only do they take a loss, but they have additional exposure as property managers and property owners. So just a couple of my thoughts on how we're going to be navigating through the distressed commercial real estate world. I don't think it's different than the Great Recession. Whether it's worse or whether it's not as bad, I don't know, but I know it's different. And the reaction to it, I think, will be different. And I think that banks learned from last time, lenders learned from last time, investors learned from last time, and that I think it'll be a more efficient way of dealing with this. And so if you're looking at, maybe buying some of this distressed property or buying some of these distressed notes, click the link below, book an appointment with us. Let's talk about it, because we're helping our clients do that right now. And we've got a lot of experience from the past in doing it. And I think that this is needed because we need creative problem solving ideas to navigate through this very, very unprecedented time in the commercial real estate business. I hope this helps. Subscribe if it does. Throw me a like. If it doesn't, give me a comment. I'd be interested to hear your feedback, as well as how we best, as a marketplace, navigate our way through the distressed commercial real estate market. Thanks a lot. Have a great day.